Morning, everyone. Welcome to this morning's edition of NBC Markets Morning Call, 14th of October, 2025. US-China critical minerals scramble continues. It's forcing Trump into essentially another taco, which Trump's always chickening out, as he pretty much he walked back the threats on China with 100% tariffs. Over 24 hours, he walked them back, then he walked them forward again, then he walked them back again. I think the voice of reason with JD Vance, etc., sort of saying, "Oh, everything will be okay." I think China's playing the US a little bit like a fiddle here, and essentially testing the waters to see what the reaction would be. But basically on rare earths in particular, which they know they have an absolute stranglehold on. So. It's sort of being walked back. Saw a massive bounce in in all of the equity markets. I think it's probably a little bit overdone. Personally, I think the tensions are still there. They're certainly still there in terms of how precious metals markets are monitoring and seeing all this. Obviously, you do have as well the added central bank buying, etc., and the de-dollarization adding to the silver, gold, platinum, and palladium's sort of up like really significant rally overnight. But there's still a lot of people out there pricing in risk. So if you have a look at if you're reading the equity market stories from overnight, it's all about chip stocks, it's all about AI, it's the bounces like, US and China are going to be okay, blah, 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 blah. You read commodities or precious metals media and pundits from that side, and everyone's super concerned about US-China relations. It's all going to go pear-shaped, et cetera, et cetera, et cetera. So essentially, this is what we've spoken about many times in the past, and I've spoken about a lot to our clients here at NPC, is that in the age of AI and the age of Google, you're only one query away from drinking your own Kool-Aid and finding an article or an argument that basically backs up the way you're thinking and whatever supports your portfolio. So because both can't necessarily be right really in this situation. I mean, not as severely as this has moved overnight. So you can sort of see here the Eurostock's got a little bit of it. The Aussie market, we had a lot of this already priced into futures about 1% yesterday. SPI futures were disappointing overnight, only up 0.3, despite the fact that it was up a little bit already in the Aussie market. I used to watch overnight SPI traders, and they used to just trade relative value between the S&P. Completely different markets. I would expect the Aussie market and the SPI's mispriced this completely. I mean, we're going to have gold miners, silver miners, copper miners, any of those smaller miners and critical minerals are going to be going absolute gangbusters today, as you'll see as we get to the commodities bar chart, which I might actually just flick ahead just to show you. We've got 3% rallies in gold, 7% record highs, woohoo, in silver. It's only taken me 2 years to get that right. Copper is going gangbusters as well, up nearly 5. Platinum up 4, uranium up 7. Essential, and then Bitcoin sort of stopped the rot as well. So, how the SPI and even iron ore was up about 1% yesterday or thereabouts. How the SPI's not up 1% after that is just absolutely beyond me. A lot of the heavy lifting was done, obviously, in the chip sector last night because there was threats about restricting software to China, which would affect the chip makers, which would affect the software companies, etc. Because a lot of these guys have to write their own software as well. But Broadcom and Oracle last night doing deals with OpenAI, so that's sort of circular. I'm trying not to swear. There's all of those circular deals going on here at the moment on the back of OpenAI being a private listed company is still adding just ridiculous amounts of market cap to this entire sector here. And as you can see, it's just getting this is just getting bigger and bigger and bigger and bigger. We're talking it's got to be half the market now. At what point does at what point do we is it too much? I mean, there's only sort of certain amount of money supply in existence. And that those chip sectors is just running absolutely white hot. So Tesla, I mean, this is just all bouncing back from yesterday. Essentially, it actually didn't regain all of the ground it lost, which is probably fair enough. But yeah, I look, I this open AI circular money passing hands and then buying chips and yada yada yada. It feels the whole thing feels like a cap raise tactic from OpenAI. Essentially, they need money. They don't want a cap raise because they want to hold as much as they possibly can. So they're doing these mutually beneficial things where they've done the deal with Nvidia. That was probably priority number one because they've got the best stuff at the moment. And then they go and do they're going and doing deals with biggest cloud provider and then the secondary chip makers, et cetera, et cetera, et cetera. So the I mean, it kind of makes sense and it could be very smart, but I'm not entirely sure. I mean, OpenAI is sort of ingrained in that, but it's not the leader in any of the large language models anymore, in any of the baseline metrics. So for any of the reasoning, the mathematics, or whatever, I mean, unless there's a major upgrade coming, and it is the most used, but it doesn't mean it's the best either. So it'll be interesting to see how all of that plays out. Yeah, look, broadly, I mean, I suppose over a 2-day period, you've probably got the healthcare sector suffering the most. We are going to have these. I'm going to come back to this. We are going to have the JP Morgan Chase, Goldman, Citi, Wells Fargo tonight. They will be before the market open. The banks are generally before the market open. And then that sort of really does kick off earnings season. Fastenal last night dropped 10%. On not an ugly result, but not a great result. But yeah, we're going to, and I'm just going to give you a quick guide here on your critical minerals scrambles. So essentially, that's why I'm a little bit late this morning on the podcast. I've been doing a lot of, in the old days, would have taken me about a week to get this research done. But now with the joy of AI and 3 or 4 different AIs and an in-house AI, basically able to pull, what the US is focusing on and their strategic priorities, but then importantly, there's 2026 supply demand outlook. So, look, I mean, rare earths critical, but I mean, China can curb them, but mild surplus basically. There's oversupplies and things like silver and potash. There's oversupplies, balanced to mild undersupply in lithium, and there's an oversupply in nickel basically. So, but these guys here, deficit, undersupply, likely undersupply, balance to undersupply, and undersupply risk, they're your big ones. Copper, cobalt, antimony or antimony, depending on whether you're potato, and tantalum. So they're both critical to the US and they're coming into deficits and undersupplies. So essentially, they're the ones you probably want to focus on. We've been in US antimony. There are a bunch of small caps. I mean, we don't do these micro cap, junior miners at MPC generally because clients don't necessarily have the stomach for it. But I've heard of great things on Rockwell, TMG, and a bunch of others. But yeah, check out Agro and a few of the guys there. There's a bunch of people on Twitter that have been really focused on that space. You won't find it very hard to find. Just have a look at Agro space on Twitter handle, and then go down the rabbit hole from there. But a lot of it will be very speculative. A lot of them don't sit in the Lassonde curve anywhere near the production space. Some of them do, but it's certainly worth. Like, we're a mining exchange here in Australia. If we can't find a bit of bullishness around mining and these thematics, I mean, seriously, just everyone's clearly given up and just trading ETFs now. So I would imagine if Aussie traders and active fund managers had any courage about them, for lack of a better word, we should really scramble higher today, I would imagine. And look, iron ore is not going to be in undersupply anytime soon. But if we're going to start, your critical minerals are where the scramble would be. But this is just like commodities versus the equity market is the cheapest, or probably not now, but 6 months ago was the cheapest it's ever been. Like Nvidia was like 5 times the size of the entire mining sector. And look, I think this, I think you, even if you add to copper, particularly in cobalt, they're they're used in defense and battery needs. Like these are all the same. So our high conviction thematics here at MPC, rapid data center expansion and defense are 2 big ones, and precious metals. Copper's an offshoot of gold mining, but there's undersupply, but cobalt as well. These 4 very much overlap on a bunch of super strong thematics. And look, if we get through 50 here, there's now analysts calling silver $100 and things like that. Look, I think copper's the underestimated one here. It's very close to record highs, but there is a supply deficit coming. The data centers need it. The renewable, like the rewiring of power infrastructure for the likes of nuclear or renewables or whatever needs it. If China's property market starts to go, they're going to need it. And then the likes of cobalt as well. I think lithium's on there, but there's a lot of very recently mothballed mines, which doesn't fill me with a lot of confidence that it's going to there'll be a bunch of those shitty mines that close down that'll get reopened again. So these guys here, they're your good picks, because you've got overlapping hot thematics. You've got likely undersupply or supply deficits, and US and China are going to be playing as the feature image showed at the start. It'd be like a game of hungry hippos. It'd be just like everyone will be scrambling for them. So we when commodities go on runs, they can go on serious runs. So we having a look at these commodities here now, like silver. So we saw the lease rates for silver go up to about 40%. I think I spoke about it yesterday. That's really starting to play out. They're at the point now where they can't deliver, like they're having to deliver silver into London via plane. That never happens. It's so inefficient. But the lease rates, it's your interest rate to guarantee a delivery on silver is like 40% per annum at the moment. So look, gold just keeps going. Like I said, copper looks really good at the moment. But we're also getting to a point now where I just did a bit of analysis on BHP this morning as well. And I'll show those charts tomorrow where, look, aside from coal, iron ore's largely flat. BHP's down about 4% for the year. Copper's up like 20 odd. If it stays here, copper, that's going to be their largest profit revenue line. And then you've got to remember, potash is coming on next year, and potash price is up 25%. So it's probably, BHP's probably fair value-ish at the moment, maybe a little bit cheap. But what you've got to realise is that iron ore has been very depressed for a year. All of the other commodities have gone up, and we still haven't had an earnings where these higher margin copper prices and things like, they're going to make an extra few billion out of their margins in silver and gold, which are like byproducts. But if iron ore spikes now, and it's been sitting on, it's been sort of building a little bit of steam and going sideways, but hitting the top of the range for the last 6 months quite often, BHP could be like a coiled spring. Rio as well, really good pick, and they're probably even more copper as a portion of revenue as well, a little bit more diversified than some of those other metals. So if iron ore goes now, I think there will be an exaggerated reaction from the likes of those big diversified miners. If you're in Fortescue, I'd switch. But general advice only. It's our in-house opinion, but you're just not going to get. I think that there's a fair bit of underestimation there. So yeah, coming into the second last day for our AI automation and robotics investment, the likes of Tesla, TSMC, Symbotic, which hit record highs last night, Teradyne, and then and a few other picks there, Zebra, which is Intuitive Surgical in some of these packages here. We've had a really good track record on these enhanced growth strategies lately. For instance, we did hyperscaling AI last month. One of the baskets was Oklo and Vertiv, which was power and power management for that rapidly expanding data centers. We're talking, this was 25th of the 8th was the first day for that. And so we're about 6 weeks in. That part of the strategy is already up 132%. So, and you got in that strategy, copper miners up 33. Ecolab, which was water, is the only one that's down. It's down 2. But Oklo's up 140%. Vertiv's up 43%. Alphabet's up 20%. Oracle's up 31%. So they were the six strategies. The 6 stocks in the strategy. So, we've had a decent track record recently in picking these, and and also our silver platinum enhanced growth strategy from 4 months ago is now up nearly 175% as well, with silver up, silver up 50 and platinum up 50, or thereabouts. So, and so, they're really good capital effective ways to go about things. We do also have a fixed coupon note for those of you who are interested in income, and it's looking about around the 14% per annum mark, with a basket of AMD, Nvidia, and Google, and that's pretty damn good going and very financially stable. So if you want to inquire, check it out. There's my email's down there. But yeah, thanks for listening, guys, today. Get out there and get amongst those critical minerals, because I think there's there'll be plenty of upside and plenty of attention over the coming weeks. That's for sure. Cheers, guys. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.